Good morning and a welcome to Ask the Expert, an award-winning daily series from 8:30 a.m. to 9 a.m. to help small businesses just like you. If you have any questions, ask them in the comments of the live feed. If you need any more advice, join the official Intuit QuickBooks SMB community group on Facebook. Accountant business experts just like myself are on hand 24/7. During the live stream, we'll be running a poll, so please do engage with it and I'll reveal the results at the end. Also, don't miss out on QuickBooks Connect. 3rd of March, you can attend Intuit QuickBooks virtual event. The virtual event brings entrepreneurs, small business owners, and accountants together to grow, learn, and connect with each other. I certainly can't wait to see what's on offer. Okay, so who am I? My name is Aaron Patrick, and it's a pleasure to be with you again. I'm a chartered accountant, a QuickBooks certified trainer with a fancy new logo, so don't be afraid to ask any QB related questions today. I own a state-of-the-art accounting firm called Boffix, which uses the best cloud technology available to help small businesses get crucial real-time information they need at their fingertips. If you require accounting advice, payroll, bookkeeping services, and now even QuickBooks training, then please do get in touch. We don't want small business just to survive, but to thrive. I also have a dedicated QuickBooks YouTube channel called Aaron Patrick, the QuickBooks Chap. So if you need any more QuickBooks news and advice, then why not go and give the channel a nice little follow. Okay, enough about me and let's focus on today's session. As always, this session is all about you and your burning questions. If you have a question, please use any of the social channels to get in touch. So while we wait for the first of the questions to arrive, we have a special Ask the Expert today, all about 3 little words. So those 3 little words are MTD. And what is MTD? I hear you all say, but it stands for Making Tax Digital. So today we have a special on Making Tax Digital. If you're VAT registered already, you may already be aware of what Making Tax Digital is, but you might not be aware of the fundamental changes coming your way. Essentially, anyone who's involved in having to file a tax return is going to be affected by Making Tax Digital. So let's deep dive into it. Let's take an opportunity to understand what's happening. Essentially, paper returns and a simple file option for filing VAT returns are going to be gone. So what's changed? Well, prior to MTD, as the name suggests, everything has to be digital. And if you think about it, how did we used to do things before MTD? Before that, it was all paper-based. Very, very beginning of it, it was an opportunity for you to file your tax returns all on paper. Then we migrated over to be able to file it online, but it was still basically replicating a paper return. And we were asked to essentially fill out that paper return, but online. Making Tax Digital is going to change the way we do that completely. So what does MTD is and where is it now? Well, MTD for VAT business registered since 2019 has already been implemented. And what you'll find if you're VAT registered since 2019 and over the threshold is that you have to file your VAT returns, not by completing either paper return or replicating a paper return online. You're having to actually file your whole records via a software solution. So all the VAT registered companies since 2019 have had to go through a change where instead of having to just tell HMRC what their numbers need to be on the return, well, they've actually had to go through the process of fundamentally changing the way they even process their numbers. And they've had to do it all through software like QuickBooks Online. And the way in which it works is you put all your information into QuickBooks. QuickBooks collates that information for you onto a VAT return. But when they send that VAT return off, they're not just sending the higher numbers, but they're also going to be sending and explaining how those numbers are put together. And fundamentally, that's what MTD is all about. You're not just going to be sending your totals, but you're going to be sending how those totals are going to be achieved. Coming up in April 2020 is the extension of that Vat Mtd scheme, and it means that all VAT registered companies will be affected. So currently, if you're below that 85,000 threshold, then you don't have to file by MTD. You can still file by the old traditional methods. But from April 2022, that changes. MTD for income tax assessments is also going to be implemented from April 2023. And this is the big one. This is the massive change that we're going to be talking about today. So Making Tax Digital for income tax self-assessment from April 2023. And if you think about it, That's not far away. We're going to get into a little bit about what that means in a moment. And just for your diaries as well, MTD for corporation tax return is expected around 2026. So we've got 2 important dates there. So underlying theme of what Making Tax Digital is all about digital record keeping. And the old ways in which we used to compile a tax return, so we're talking about personal tax returns now, will be completely changed. When you think about how you compile a tax return now, it's all about scrambling to get that one tax return in each and every year. And again, effectively, what we used to do was put it all on paper, fill in all the boxes and submit it to HMRC. Now, the changes is that, or it evolved from there to, we were still filling in a quote unquote paper return. It was just digital. We had the same return, we just were able to do it digitally. And all we were doing with HMRC was telling them those total figures, filling in all those boxes on your tax return. And anyone who's already done a personal tax return, you'll know that it is quite a stressful time when you know that you've got until the 31st of January to get all of those boxes, all of those returns, all of those numbers all processed and submitted to HMRC. Now, the big changes, or one of the big changes that MTD is going to bring in for your self-assessment is that quote unquote paper or electronic return that you're used to doing will be no more. And that's the big issue. And we're not only just going to see that be removed from us and the way that we put it and the way we're comfortable with submitting that return as we are now, but it's also going to go into quarterly reporting. So the big change is that quarterly reporting means that instead of you having to file 1 return, you're going to be filing 5 returns in a year. And I'll explain where that number comes from in a minute. There's a pilot that's going to start from this April. So if you are interested in trying to see this firsthand, there's an opportunity for you to jump in before everyone else. But MTD for real starts in April 2023. Who's in the scope? Who is going to be affected? Well, any sole traders out there who are currently having a sole trader income, your income will then have to be accounted for in MTD. Any landlords out there who have rental income for both UK and overseas property will have to be included in there. Any partnership income, that's going to have to be accounted for, and the partnership return as well is going to have to be done in the way of doing it as a MTD. There is an income threshold before you have to account for MTD, but the threshold is only £10,000 at the moment, and it's £10,000 of everything added together. So if you've got sole trader income, if you've got landlord income, and remember this is income, not your gross, your profit. If you have income of over £10,000 with any of those 2 added together, then you're going to be in MTD. So MTD is for anyone with any income over £10,000 with those categories talked about above. And once you're in, you have some new ways of being able to compile your quote unquote tax return and be able to put your information into HMRC. You're going to have to maintain digitals at what's called a transactional level. You're going to have to make sure that those records are what are completed with what's called digital links or digital records. So from transactional records all the way through to submission. You've got to think from HMRC's point of view, they're not just interested in the totals these days, they want to know how that number's made up. So if you tell HMRC that you've put £30,000 in as income in a particular year, they want to see how that £30,000 has been made up. They want digital links to those prime transactions. You're going to submit summary information to HMRC on a quarterly update. So again, instead of having that 1 tax return to complete, you're going to have to now consider having quarterly tax returns. You're going to submit end of this period statement, which is an EOPS going forward. And basically the end of period statement is a collation of all of those quarterly ones. And it's going to have to be a breakdown of basically what actually happened in the year. So those quarterly ones are essentially going to be your best guess or as close to you can get them as you possibly can. And the EOPS is supposed to finalize that particular year and make sure that you've accounted for everything in the right period and so on and so forth. You're then going to have to finalize your liability for the tax year. One thing that they are saying from that quarterly updates is not just the returns are going to be submitted, but you're going to have to account for any taxes at that point as well. So instead of having to pay your taxes once a year or twice a year if you're on payment account, you'll be going on to it having to pay it every 3 months, so on a quarterly basis. The requirement will be submission to HTML via an API-enabled software, for example, QuickBooks. So if you're using QuickBooks, you're definitely in the right place. But the requirement isn't that you can just keep your records on a piece of paper, in a book, or keep your records even on an Excel document at this point in time. They want you to be using a particular piece of software, which has what's called API integration with HMRC. And HMRC has given us a list of all those software that's available, and QuickBooks will definitely be one of those. So what do we need to keep? Simply put, it's all about digital records going forward. When you are trying to figure out what HMRC are going to require of you going forward, they want your records to be digitalized. So that means every transaction, and a transaction is basically what it is that you've bought or sold, then you're going to have to make sure you account for a date, some category, the amount on each and every one of those transactions. The category is expected to be the categories that we already see in our self-employed income and property sections in a current self-assessment return. And HMRC will encourage real-time recording of transactions, but legislation says by the date that the quarterly updated is submitted. So they really want you to move on to real-time information. They want it so that as soon as information comes into your bank account, for example, you categorize that, and that basically is what's submitted to HMRC. Now, the quarterly update sounds simple on paper. It sounds like we're just going to have to go from having to submit one return to having to submit basically 5 returns, isn't it? When you think about the idea that you've got one return each quarter and then a final one at the end of the year, it sounds like we're just having to basically expand the amount that we have to submit, and also we've got to think about doing it more often. But it gets a little bit more complicated, and the more complicated bit is going to be about what about if you have a more complex tax return already? So what if you already have multiple income streams on there? So what about if you have multiple sole trader businesses, or you have a sole trader business, a partnership, and you have a rental income? Well, the annoying thing that you've got to take into account, and something that's going to fundamentally change the bit that you're doing it, is that each one of those income stream is a different requirement for MTD submissions. So what that means is, if you have multiple income streams, if you already have rental income, you already have your sole trader income, you're already having a partnership income that you have to submit on an annual basis, instead of having to just submit one return and not even just 5 returns, you could be required to do 20 returns in a single year, which is completely different to how it is now. That's a lot of submissions. And also, remember, you might be VAT registered as well. So you may have requirement to do 4 of those submissions in each one of those as well. You're suddenly having to complete not just 5 transactions, 6 transactions, or 6 submissions in a year, but you could be looking at 30 submissions in a particular year, which is why preparation for MTD is going to be so essential going forward. And it's something where, although we're talking about April 2023, preparing for it now is important. So what can businesses and agents do now? What can we do to make it easier for you? Well, one of the things I found that's been most useful is talking to each other. Start getting involved in these communities that we've got. The QuickBooks community is a great starting point, great place. Experts are on hand 24/7, like I say, and we'll have the opportunity to be able to talk about what expectations are, how we think we're going to be processing them, and everything that we've got through. We're going to start mapping out current processes and developing implementation plans for how we're going to be recording our bookkeeping going forward. And we're going to have to be prepared of how we're going to manage those quarterly updates and quarterly submissions and how that's going forward. Also, if you rely on an accountant, or you are an accountant listening to this, then just bear in mind the pressures that they're going to be on in the implementation, the change that's going to happen. If they currently have 1 submission to worry about, suddenly they've got 5 submissions, and not just 5 submissions for each individual client, but 5 submissions for each individual client for each individual income stream. That could be a lot of submissions that they're going to have to deal with. So if you're fully reliant on your client to do these things for you, then you're going to have to work with them. We at our practice, we're already considering how we're going to have to change things, how we're going to have to work with our clients and be able to make sure that we're able to be able to take MTD on when it comes through. April 2023 isn't far away at all. It's not long until we hit that point. So please, please, please use this opportunity to be able to get yourself prepared. Keep watching Ask the Expert and other content from QuickBooks Online to see updates on how the software will help. And again, the big takeaway is just get yourself prepared. April 2023 isn't far away, so make sure you're ready. So let's go on to the most important part of this session, which is all about your questions. So let's see what the first question that has come through live on the show. So we've got Leonardus, hopefully I've said that right, from Facebook Messenger and asks, hi Aaron, what does it mean when HMRC say that their new roles will require a digital link between all software used by businesses for its VAT compliance? Well, first of all, it's not just VAT compliance going forward. So remember, April 2023, I can't say this enough, we have fundamental changes. 3 little words, MTD, April 2023. But if you're a VAT registered company, you've already been filing or submitting your returns as a MTD solution, unless you're below that threshold. And if you're below that threshold, you've only got till April 2022 until that changes come into place for you. But what does digital links mean? Well, the idea is that HMRC want to have an understanding of how those numbers have been made up. Prior to MTD, it was all about just filling in a VAT return and submitting, or filling in a tax return and submitting it, and it was all based on your total figures. Well, HMRC want to run checks. They want to make sure you've got things right. They want to make sure that you're doing it correctly so that you're not overpaying taxes or underpaying taxes or whatever it's going to be. They want to make sure that it's fair and that what you're submitting is correct. Now, they can't do that if they've just got totals. Totals won't help one bit. So what HMRC have started to do is implement this new making tax digital regime so that they can see what those numbers are fundamentally made of. And that's going to make it important for them when it comes to trying to make sure that you're doing it right. So the idea and the way in which we submit our returns and the way in which we compile our returns is going to completely change, because we're not just going to be submitting totals to them, but we're going to be providing the transactions that make up the total. And what we found already is that means that HMRC don't have to do an inquiry for the sake of it, because maybe one of your totals has increased higher than another total and there's all algorithm and all that sort of stuff. HMRC can see how those numbers are made up. Therefore, they can make sure that they're only going to be inquiring on people that need to be asked questions, that don't look right, that may have done something wrong, or whatever the reason is going to be. And the whole digital link is basically how that information is going to appear over to HMRC, how they're going to understand how those numbers are related to, so they can make they can do their checks and make sure everything is okay. So fundamentally, that's what a digital link is. Now, what that means for us means that we're going to have to rely on software. We can't have paper records anymore. We can't have necessarily Excel spreadsheets anymore. We're going to have a way in which we can submit to HMRC how those transactions are done. Stephen from YouTube Live asks, hi Aaron, hope you're well. We operate pubs across Northwest and was wondering, will this be the same for MGD, which is Machine Games Duty? Now, fundamentally, HMRC are changing every tax system they've done. Now, the reason they've targeted the ones that they've gone for so far, MTD for VAT, MTV for self-assessment, and then MTD for corporation tax coming soon, is because they're their biggest earners. They're the ones where they need to make sure have been sorted out first. So basically, every different type of tax at some point will migrate over to this Making Tax Digital solution. And the idea then is that hopefully, from a real-time information point of view, HMRC will be more on the ball when it comes to what people are being done. So there's no official word on any other schemes at the moment being put over there, but I can imagine they will do, especially with HMRC investing heavily in MTD and the infrastructure of how this is going to work, because they want everything to move over to that. If you think about the old systems that are currently being used by HMRC, they are archaic to say the least, and they're not fit for purpose in some respects in terms of what they want it to do and how they want to be able to implement it and how they want to make the tax system as fair as possible. So it makes sense that every single type of tax scheme out there will at some point be migrated over to Making Tax Digital. So I'd expect to see that soon. The good thing is, though, with all things like that, you'd already have a solution when these other schemes to go over there. You'd already have a solution in line for you filing your either self-assessment or your corporation tax at that point, or your VAT at that point. So you should be using software, and it's all about that software then being able to provide you an opportunity to file your MGDs or your machine gains duty elements like that. So I think one thing would be a benefit is the fact that we'll already be in a position to file from a Making Tax Digital point of view. So you shouldn't find any changes to any other schemes as big as an impact as what it's going to be for self-assessment and corporation tax. So hopefully that answers your question. Thanks for that question, Stephen. Ambrose from Instagram DM asks, are there any updates or changes in timelines for filing VAT returns? Is the deadline for filing deferred VAT returns still March 2021? So let's get this completely and utterly clear on this one. When it comes to timelines, every timeline in terms of filing your your VAT return to say is still the same. Your period ends, you have 1 month and 7 days to get it through. So as soon as your period ends, get to that month end, and you get 7 days grace basically to get that over. There's been no news about if that's going to change or anything else, but at some point we may find that just come back down to 1 month. That 7-day bit, just so you're all aware, was only a bit of an incentive for people to be filing electronically before. But remember, we're not talking about MTD, we're talking about how we used to replicate a VAT return basically online. HMRC basically said if you stop filing from paper and you move over to this electronic method, then we will give you an extra 7 days. So that's where that 7 days ever came from. It was an extension. It was a thank you, an incentive to move over to electronic filing. Now, MTD is that next evolution of that. We've still got those 7 days at the moment. We may find those 7 days taken away from us at some point. But the key point for you to remember, Ambrose, about all this is we weren't given a deferment from VAT for filing the return. So it wasn't that we were being able to defer filing the return. We still have to make sure that return was in. So if you haven't completed your return from last March, basically, then make sure you get that filed, because it wasn't a deferment for filing the VAT return. It was a deferment for paying the VAT return. And what's happened is if you go into your HMRC portal as your business, where you've got your MTD VAT already set up, then what you'll find is there will be a new little scheme, a new little box, a new little link in there that will give you an opportunity to how to pay the deferment of that element. So remember, we still had to file the return, but we had the opportunity to defer the actual payment of the VAT. And what that means is as well is it will give us opportunities not just to pay it directly, so we could just pay it all off in one go if we want to, but as long as we're okay and we meet the criteria HMRC is given, so making sure our VAT returns are on time, we've got no over debts, that sort of stuff. As long as we meet all those criteria, then we're going to be able to log into our MTD portal, and we're going to be able to opt for a pay monthly option on that VAT deferment. So instead of having to just pay it all in one go, we get the opportunity to spread it over an annual basis, which is going to be really beneficial to businesses and going to help their cash flow going forward. So big takeaway from that is not the deferment of the VAT return itself. The VAT return must have already been filed, and do make sure you file it if you want to take advantage of these repayments. But the deferment of the cost or the payment of the VAT return, that is due March 2021, but we should have the opportunity to jump into our MTD portal and get an opportunity to opt for some sort of payment scheme to help us from a cash flow point of view. Hopefully that helps you there. Anmaris from Twitter DM asks, hi Aaron, do I need to reauthorize QuickBooks for the new MTD rules? Basically, the new MTD rules in terms of VAT versus self-assessment. Well, from a VAT point of view, nothing really changes in terms of the MTD implementation, everything else. You do find that HMRC do need an authorization every, I think it's 180 days, something like that. There is a time frame where they need to have authorization. In fact, it might be 1.5 years, actually, thinking about it. So it might be 18 months. So HMRC, from an MTD point of view, do have the need or the requirement for that side to be authorized. But what we'll also see is that that's all they need from reauthorization. When it comes to the new MTD rules, so we're talking about self-assessment and everything else, that's going to be a completely different portal that you'll be filing into. So you will have to tell QuickBooks at that point your new credentials. So it's not your old credentials you've been using. There will be a migration to a new platform, a new solution for filing, just like we did with VAT. So we had one platform that we used to file our MTD on. We then migrated to a new MTD platform, which caused a lot of headaches, a lot of issues, but that's for another Ask the Expert. But yeah, basically there will be no having to reauthorize. It's going to be a brand new authorization for the new MTD rules. And then the next one, Sherry from Facebook Live asks, I'm a sole trader, doggy daycare, currently trying out QuickBooks Self-Employed. Is this probably going to be changed? Is this going to be up to the changes, or do I need to upgrade to another QB product? What a wonderful question there, Sherry. So hopefully we can answer that one for you, and it's going to be a really simple answer. And the answer is yes. All of the products from QuickBooks is going to be designed to be able to submit and be able to support you for making tax digital. Making tax digital isn't just something that's appeared overnight. There's been preparations and there's been ways in which we've been looking at it for a long, long time. Now, when it comes to are you on the right product, that is more going to be based on other factors. When it comes to a sole trader, doggy daycare, my gut feeling is you probably are on the correct product, but do remember that if you do push yourself to the next level, you do get a lot more extras, including cash flow forecasts, better reporting, a more fundamental way of being able to implement your data and be able to find ways to make your data run quicker for you in terms of rule management and all this, that, and the other. So a whole idea of which version is right for you is a bigger topic, really. I do a video on my YouTube channel, so a quick plug for that one, where we do go through all the different versions of QuickBooks and see how that works for you and your business. So maybe that's going to be a good starting point. But another plug I'd say is the Facebook community group. Perfect place to be able to ask those sort of questions. Make sure you're right. It's not a simple question of, is QuickBooks Self-Employed right for this business? Is QuickBooks right for that? There's other factors we need to take into place. But the good news is that there will be, if you don't want to change, there's no requirement to change. All of your systems and everything else will be working on QuickBooks Self-Employed. So next question is from Dwayne from Twitter DM. Can you give us tips on common errors to avoid making any errors when doing my tax digitally? Great question there. And Dwayne, it's really, really straightforward. Going forward, making tax digital is all about making sure that the data you bring into QuickBooks is as strong as it possibly can be. Think about it. You're now bringing in data directly from your bank account. So fundamentally, that means that errors and stuff like that shouldn't be as common. Things like your dates and your amounts are already going to be completed for you. You just got to make sure the right categories are going to be assigned to it. And the beauty of it is using AI, using knowledge that QuickBooks has got, then QuickBooks is already going to be doing some checks for you in the background, is already going to be looking at that sort of stuff for you, and already going to be helping you going forward. Also, QuickBooks is implementing a lot of new features which is involved in checking that data. We, as business owners, are now more reliant than ever on real-time information. So QuickBooks has really pushed their boundaries in terms of making sure that there are ways in which inside the product to make sure that you're confident on the data you've got. So that if you do rely on cash flow forecasts, you do rely on reports that are being done, you can be more confident in them. So basically, it's all down to what QuickBooks is doing, the innovations they're bringing in to be able to help to make sure that that data is correct. Because that's what QuickBooks fundamentally cares about. They want to get that data in quickly for you and easily for you, and then they want to make sure that it's right. So keep using QuickBooks, and I promise you, you will make sure that that is one of the best ways to make sure you've got no errors at all going in. And as long as you've got all the data flowing in lovely, you'll have a good result. Okay, hopefully that's answered the question there for you, Dwayne. Great question. Good luck with it. And if you do need any more information, I did do a video on my YouTube channel all about how to make sure you've got check your data before you submit it to HMRC. So maybe that could be a good help for you. All right then, so everybody, thank you very much for attending today. We did run a poll. I did ask you to be involved in it, and the poll results were in, so drum roll please. We asked you, have you pivoted your business in the last year? And astonishingly, 50% of you, or just 50%, 49 point whatever, has said yes, you have pivoted your business, and another 50% has said no. And that's a really good indication there of where we're at this point in time. I think a lot of businesses have had to pivot; they've had no choice. They've had to have that opportunity to change, and it's going to be interesting to see how they implement that going forward, or if they change back to how it was before. It's going to be interesting to see what goes on from there. But 50-50 basically at the moment. That's a really interesting reaction. So with that then, it's all down to the end of today's show. So thank you all for tuning in this morning. I know MTD is a bit of a scary subject and probably not the first thing you want to listen to early on in the morning, but I promise you it's a change that is coming. It's a change that is going to be fundamentally different to the way you do business. So please, please, please don't ignore it. Get yourself prepared. April 2023 is not far away at all. If you want to get in contact with me, you can send a message at hello@Bofix, or my YouTube channel is a great place as well. Put a comment below. I answer all the comments on my videos as I go forward. Coming up on Ask the Expert tomorrow is Freddie Hewitt. I don't know if you've ever had the pleasure of seeing some of his Ask the Experts before, but they are brilliant. He's the founder of Stag Coffee, a coffee shop situated at the Heart Ashford Town Centre. Tune in to learn how he pivoted his business, very apt for the question we asked today, his high street business, and grown his business into these challenging times. And if you remember any of his previous Ask the Expert, he's a great insight into how it does. And it's a story that I still use today for my clients to be able to give them some bit of inspiration of how one can pivot their business and get the most out of it. Don't forget to join the official Intuit QuickBooks SMB community group on Facebook and also register for QuickBooks Cadet. You'll find the link in the comments. With that then, it's just a pleasure to do this video for you, and I will no doubt see you in a video sometime soon. Cheers all.